Welcome. Today we're diving into a story that's unfolding in real time, one that could affect your wallet, your investments, and your sense of financial security. Today, we need to talk about your money and the price of gold. Gold isn't just a shiny metal. It's a barometer for global uncertainty and investor sentiment. Yesterday, gold jumped over 1%, a major move in commodities. That kind of surge doesn't happen every day, and it's caught the attention of markets worldwide. Investors are seeking safety, and gold is their top choice. When uncertainty rises, people look for assets that can weather the storm. As of this morning, spot gold is trading at $3,988.79 per ounce, up 0.2% in Asian trading. This isn't just a local phenomenon. Markets from Asia to Europe are reacting. U.S. gold futures for December are also up, nearing $4,000 an ounce. Futures prices reflect what traders expect in the months ahead, and right now, the outlook is bullish. This isn't a random blip. It's a clear trend of persistent strength and investor confidence. Gold has been steadily climbing, and the reasons run deep. Why is gold, which pays no interest, suddenly the star? It's not about quick profits. It's about protection and long-term value. It's a perfect storm: government uncertainty, a fluctuating dollar, and global market nerves. Political headlines and economic data are fueling anxiety. When fear rises, investors turn to gold, a store of value for thousands of years. It's a safe haven when other assets feel risky or unpredictable. The market is consolidating after this big move, showing solid support for higher prices. This means buyers are stepping in, not running away. Think of it as building a house. You need a strong foundation, and right now, gold's foundation is firm. The groundwork for further gains is being laid. Economic worries and currency shifts are creating a floor under gold's price. Even as currencies wobble, gold stands tall. This stability signals that something big is happening. The world is watching, and so should you. The next moves in gold could have a major impact on your savings and financial future. It's not just about investors. It's about everyday people too. We're watching a pivotal moment for gold. The decisions made now could shape the market for months, even years to come. Stay tuned. What happens next matters for everyone. Whether you own gold or not, these shifts ripple through the entire financial system. Let's dig into why this is happening and what it could mean for you in the days ahead. Let's talk about the crucial relationship between the US dollar and gold. This connection is at the heart of global finance, and understanding it can help you make smarter investment decisions. Gold is priced in dollars worldwide, so when the dollar weakens, gold gets more expensive for people using other currencies. This means that even a small dip in the dollar's value can have a big impact on gold prices across the globe. It's a seesaw. When the dollar dips, gold rises. The two often move in opposite directions, creating a natural balance in the financial world. The US dollar index recently fell 0.2%, giving gold an extra push upward. Even small changes in the dollar can trigger noticeable moves in gold prices. For foreign investors, a weaker dollar means gold is cheaper in their own currency, boosting global demand. This effect is especially strong in countries where local currencies are gaining strength. This global demand helps drive gold prices higher for everyone, not just in the US, but in markets all over the world. The dollar's dip is partly due to a rebound in the stock market, which eases some of the safe haven demand for dollars. When investors feel more confident, they often move money out of cash and into assets like gold. As investors feel less need to hoard dollars, gold steps in as the preferred safe haven. Gold's reputation as a store of value becomes even more attractive when the dollar is under pressure. Always watch the dollar when thinking about gold. They're two sides of the same coin. Their movements are deeply connected, and changes in one almost always affect the other. Right now, the wind is at gold's back, giving it momentum to climb even higher. The combination of a weaker dollar and other factors, like inflation fears and global uncertainty, is pushing gold to levels we haven't seen in years. This isn't random, it's a direct financial reaction. The market is responding logically to shifts in currency values and investor sentiment. The dollar's retreat is a key driver in gold's surge, acting as a signal for investors to seek safety in precious metals. When the dollar stumbles, gold shines. This pattern has repeated itself throughout history, especially during times of economic uncertainty. That's the dynamic at play today, and it's one every investor should understand. Understanding this relationship is essential for any investor. It can help you anticipate market moves and protect your wealth. Gold's rise is no accident. It's a response to currency shifts and changing investor priorities. So keep your eye on both the dollar and gold. Their dance shapes the financial world, and understanding it can give you an edge. Now, let's turn our attention to Washington, where the decisions, or indecisions, of lawmakers ripple far beyond the city's borders. The longest government shutdown in U.S. history is fueling a wave of uncertainty that's being felt across the nation and around the world. This isn't just about politics. It's about the very real threat of financial instability that can shake markets and unsettle investors everywhere. When the government stalls, markets get nervous, volatility rises, and investors instinctively seek out safer ground for their money. The shutdown sends a clear signal of instability at the heart of the world's largest economy, raising questions about what comes next. Global investors see this turmoil and rush to gold, the ultimate neutral asset that stands apart from political squabbles. Gold has no political ties, no party affiliation, and no agenda, making it the go-to safe haven during times of chaos and confusion. The shutdown disrupts essential services, delays government payments, and slows economic activity, affecting millions of Americans. Businesses that depend on government contracts are squeezed, workers face uncertainty, and recession fears begin to rise. In this environment, gold's appeal as a hedge against risk and instability grows even stronger, drawing in both seasoned and new investors. The longer the shutdown drags on, the more it erodes confidence among consumers, businesses, and investors alike, creating a sense of unease. When confidence drops, spending and investment stall, and the economy risks entering a vicious cycle of decline. Gold thrives on this lack of confidence, shining brightest when other assets seem uncertain or risky. It's the asset people turn to when faith in other systems falters, offering a sense of security that's hard to match. The shutdown is a real-time lesson in why gold matters, and why it's been trusted for centuries as a store of value. Political gridlock is boosting gold's role as financial insurance, reminding us that uncertainty can strike at any time. In times of uncertainty, gold stands strong, offering stability when the world feels anything but stable. That's why, in moments like these, gold isn't just shining. It's truly standing out as a beacon of security. The shutdown has created an information blackout. Key government economic data isn't being released. Without official reports, investors and the Federal Reserve are flying blind. Private sector indicators help, but they're not as reliable. This fog of uncertainty makes it hard to gauge the economy's true health. When clarity disappears, fear rises, and so does gold. Investors prepare for the worst, moving assets into safe havens. Gold is the classic fear trade, rising when anxiety is high. The data blackout is fueling gold's rally. Even the Fed is left guessing, adding another layer of uncertainty. In this confusion, gold's appeal as a store of value only grows. Despite the data blackout, the ADP employment report surprised with stronger than expected job growth. This suggests the labor market is more resilient than feared. A strong jobs report reduces the odds of a Federal Reserve rate cut in December. Normally, higher rates are bad for gold, since gold pays no interest. But here's the twist. Gold's price is holding firm, even with less chance of a rate cut. This means other forces, like the weak dollar and political chaos, are overpowering interest rate concerns. Safe haven demand for gold is dominating the market. Investors are more worried about instability than missing out on yield. Gold's resilience signals deep underlying strength. The usual rules don't apply when uncertainty is this high. Gold is defying expectations. That's a powerful message for investors. It's not just individual investors. Major analysts and banks are bullish on gold. ING and other institutions see the current environment as highly supportive for gold. Safe haven demand is strong, fueled by global uncertainty and geopolitical tensions. Central banks, especially in China, Russia, and India, are buying gold to diversify away from the dollar. This isn't speculation, it's long-term strategic accumulation. Central bank buying creates a strong floor under gold prices. Experts agree, safe haven demand and central bank purchases are driving a sustained trend. Even negative factors like interest rates can't derail gold's momentum. The consensus is clear. Gold's strength is built on solid fundamentals. This is more than a temporary spike, it's a lasting shift. To understand gold's rally, let's compare it to other metals. Silver is rising too, but it's more volatile and tied to industrial demand. Platinum, mainly used in industry, is flat, showing this isn't a broad commodity boom. Copper, a key economic indicator, is up slightly, possibly due to supply issues or hopes for global recovery. The real story is gold's outperformance as a safe haven. Investors are prioritizing wealth preservation over speculation. Gold's strength stands out amid mixed signals from other metals. The market's dominant theme is caution. That's why gold is outshining silver, platinum, and copper. It's the ultimate safe haven play right now. Beyond the shutdown and dollar, global tensions are adding to gold's appeal. Geopolitical hotspots and trade disputes keep investors on edge. Gold acts as a barometer for global anxiety. The more nervous the world, the higher gold goes. Tariff battles are back in focus, with the Supreme Court reviewing their legality. Trade wars raise inflation risks and disrupt supply chains, weighing on growth. This uncertainty makes long-term business planning difficult. In unpredictable times, gold's stability becomes more attractive. Persistent geopolitical and trade issues are key supports for gold. These aren't short-term problems, they're fueling long-term demand. Gold remains the anchor in a stormy world. So, what does all this mean for you? The lesson: diversify. Don't put all your money in one asset class. Gold can stabilize your portfolio when stocks get volatile. For long-term savers, now's the time to review your holdings. Consider having 5 to 10% in gold or a gold ETF. Not to get rich quick, but as insurance. Gold is a warning light for economic caution. Don't ignore it. Make sure your emergency fund is solid and avoid risky bets. You can't control Washington, but you can control your financial prep. Understanding gold's rise helps you make smarter decisions. Gold's strength reflects uncertainty elsewhere. Use this moment to strengthen your own finances. That's the real golden rule.